Hello, accounting objectives. We first have the first objective to provide useful information to investors, creditors, and others. So that's going to be our first main objective. We want to provide information that is, of course, useful. That information will usually be in the form of financial statements, and it will generally help people to make decisions. We also want to provide information that is relevant, reliable, and comparable. Keep those three in mind. Those are often types of test questions that come up a lot: relevant, reliable, and comparable. Obviously, we want the information to be relevant to the user. We want it to be reliable. They have to be able to trust the information that is being given. It has to be accurate, and it needs to be comparable. So what does comparable mean? That means that we want to be able to compare from period to period. So for example, how did someone do last year compared to this year on a financial basis? That needs to be consistent. It also needs to be consistent from company to company. So if I compare the financial statements from this company to the financial statements from another company, are they measuring apples to apples, the same thing to the same thing, or are they using different types of measurements? We want to make sure that they are using the same types of principles so that we can measure them. Revenue recognition principle. This is the major accrual principle that we will be discussing. It's probably the ones that's going to come up the most, probably the most important one, revenue recognition principle. When do we recognize revenue? When work is done. That might seem obvious because you would think, well, yeah, when work is done, that's when we earned the revenue. However, many students often get mixed up between comparing and thinking the same thing of cash and revenue. Cash and revenue are not the same thing. Revenue is when something has been earned. Cash is one form of payment. It is not the only form of payment. For example, if we bartered, if I did lawn care work for somebody else and they gave me a meal at their restaurant, that meal wasn't free. Our lawn care wasn't free. We did lawn care and got paid in the format of food in that case. So money just makes things easier in order to barter. So it's not the same thing. Revenue is not the same thing as cash that we receive. Most of the time, if we do a service business, if I do a service business, we do lawn care and we did a job for somebody, then we usually bill the person, meaning that oftentimes we actually recognize the revenue when we did the work, when we earned the revenue, when we did the job and sent out the bill, the invoice to the client. We're going to get the money later, but we earned it prior. Same thing with our current employment. When we work for somebody, we earned the money throughout the week. We're going to get paid later in the week. We're not going to say, hey, I didn't earn the money yet. We earned the income at the time we earned the money, even though we're going to get paid at the end of every 2 weeks or at the end of every month. Now, it could be possible to go the other way. We might be the lawn care person. We might go to our client and say, hey, you know what? I need the money up front because I used some of that money to buy some of the stuff at the store in order to do the lawn care. And so then we might get the money before we do the work. And in that case, then once again, we wouldn't recognize the revenue when we get the money. We recognize the revenue when we do the work in that case as well.